All right. Another weekly outlook. So far, a lot has happened previous 2 weeks. I am looking at a few things. Right off the bat, I was hoping tech would close at least above that resistance. Uh, any close above this previous high here would have been significant, which we did not see. The entire day of Friday was pretty much negated or removed from the close. Bulls did try to push and continue, but there was gamma there, and the gamma hedgers on tech pushed the price lower. Now, on SP 500 side, it's a different story. We are above a very strong support, and so above gamma as well. There is a very high likelihood that we can, if we can push on, Sunday, Monday, if we can push higher than 50T, we should see some upside. As far as I'm concerned right now, we're still in territory where things can flip very quickly, and it could be very dangerous for the market. We're not out of the water yet. Another thing I saw is the fact that this daily candle has no bottom wick. That's my sign here that there may be some downside left. The traumas are also all aimed down. So I still think tech is rather weak. That is the main reason why I sold a bunch of position in my portfolio, and I increased and purchased on defensive. I almost wish I exited some of those ETFs at the bottom here because some of them were up 50%. But in my strategy is not to exit early. My strategy is to hold and just accept the fact that I am risking a certain amount. So that being said, we have broken the volume on SP 500 has broken the 20 VDMA, which usually shows me a reversal coming or a fake out, so to speak. Fake out here, popped up, attempted to pop higher, failed, and now you have uh, you basically have confirmation that the market is likely bearish. Same here, that was volume spike, and then it led to a reversal into a higher high. The same thing is happening here, is what I see. Same thing here. We have fake out, and then it leads to a lower high with equal volume below or almost below the 20 VDMA. Anytime there's a spike, it's usually showing me that there is a potential for reversal. It's not a for sure sign, but it is most likely to do so. To me, it looks like a trap. It looks like a trap for people to exit their position. I'm not going to exit more just yet. I have shaved very significantly to the point where I'm I'm 75% invested, but 50% of that is in bear ETF. So uh, that's my go-to. I'm not gonna go in biotech. I'm not gonna go in healthcare. I'm not gonna go in energy because I'm already pretty pretty exposed in energy. I'm gonna go in 1, 2, 3x inverse ETF for specific sectors. That's my go-to. And I mean, the semiconductor ETF was up 50% on the dip here, so it goes pretty quick. Now that being said, I still think we're gonna go retest these right here. I mean, we haven't retested this area right here for SP 500. Nice little support here. And then you have POC from the daily time frame at 7,075. So that's also a very permanent target for me to aim at. It's pretty much where I think we're gonna go. Assuming we're not closing above 76.30. If we do close above, then obviously we're gonna probably end up pushing all through all-time high. But as far as I'm concerned right now, SP 500 needs a lower low, which would be right here. Even if it's a wick, it doesn't matter. That's still where we're gonna exit our bear ETF and then reassess. The Nasdaq has actually created a new low. I still think that's a downtrend because it's a series of lower lows and lower highs. So until we really start breaking through this one here, because that would be the second break of structure, to confirm the market structure break, I should be bearish or look for bear side. Um, that's my market structure go to. So I need to break a structure to confirm that the market structure break is a valid one. So same here, right? You have the first one, and then you have the second one, and then you actually have the MSB. MSB is valid for a trend or a continuation of the trend in the direction. Same thing with the money flow index. You know, it was at the median, and then it just rocketed back to the top and continued hovering at the top here as it distributed. So with these signs in mind, I am not going to buy any stocks. I'm not going to look for anything. I'm not in the business of playing with this falling knife. I don't want to catch it. I I've seen this before, and I would rather wait because even like I've seen this before very recently. Like it just consolidate and then creates a downtrend series of lower lows and lower highs, and then it catches the bottom. But there are signs that it catches the bottom. There are signs where it catches the bottom. You can see these signs with spikes in volume. So far, these are just looking like it could potentially lead to another trend, but at the same time, you know, the yearly implied volume move is still 8,005. We're in the middle of it. I still have my quarterly low at 69.27. Could it be going down, wick down here, and then go with a better price? That's very possible. I would rather wait and see which side. I'm still in some heavy positioning in the bull side. So if we do go up here, I'm not going to be worried because my positions are going to be gaining value. If we go down there, I'll have a point to buy, and then my ETFs will pay off. Once we break here, I'm going to start shaving those ETF. Obviously, I don't want to, you know, lose money for that, but I would rather go see a near all-time high or all-time high before I make any decision. It's kind of balancing out. It's my edge as far as right now. This is all consolidation, mean reversion on the SP 500, so it's not too worrisome. Here, there is a bajillion amount of liquidity down here. That is what I am targeting. There's a lot of, it hasn't been retested. First of all, the MSB. I still think we're going to go and retest this area over here. I would like to see, this is the first breaker structure, that would be the second one. So I want to see in the coming weeks break above this area here so that we could see retest and then the resistance here acting as a support. That would also put us back above 200T on the daily time frame, which is very significant. So far, SP 500 has held its ground. And every time it did came back, it did push a trend, but the trend left a lower high on both times that it did. So at this point, you could be bearish and be right. You could be bullish and be right. As far as SP 500, this is still a downtrend. Tech is still very weak. More earnings are coming, but as far as I'm concerned, tech is very weak. It did reject off the resistance with a lower high. It's not a double top. It's not exactly at the double top, but that's technically an equal high. My indicator is going to clock it in eventually. So at this point, just wait. Just sit on your hands. Just wait. Just be patient. Things are going to unfold. It's August is apparently by data a very boring month. So we might be chopping. Who knows? We might be, chopping in within this range, or we actually had our boring. We're a month in advance, and then we had our boring month during the month of July, and then August turns into some type of breakout. Who knows? I don't know. I don't have a crystal ball. I have indication that there is likely a retest coming from the downside over here, and then a false break up over here. So those signs are part of my system. I'm gonna follow those signs and see where we go. So as far as right now, I'm not doing anything. I would rather wait. I'm gonna update those expected move overnight for the week and the day. So that's one thing. And beside that, another little worry here is, well, let's start with VIX. So VIX did pop back up. Didn't really, like, not significantly, but we're still below 200T on the daily. Once we get above, that's when we have potential spikes. So far, I mean, 16.84 is the breaking point. If we do pop up on weekly open, we pop back up here. There's a potential that we actually will go a little higher. I'd like to see 20T cross over 50T for an actual significant spike. As far as I'm concerned, it's close, but it's not happening yet. So that's something I'm watching. Dollar fell, so that's significant for the market. Mainly why we had such big movement in the price action. Dollar's weakening. That's good for the economy. I still think we're going to go probably somewhere over here, 99.5, and then bounce back, as far as I'm concerned. Again, for a downtrend to occur, I would like to see this break and then this break with a clean close below. But I need these two to break first to confirm the breaker structure or market structure break. Other than that, I still see us as just a simple retest into a zone of support and continue higher to our cap at 103.2. So that is something I'm watching. Now, the surprise. So, oil, right on Friday, they attacked a tanker, two tankers, two oil tankers, iron, and they basically blew them up. So, oil had a massive close right off the closure of Friday. That's significant. It's likely going to apply pressure into the market at open. Not only that, they're probably gonna, throw some fucking news outside of the market saying that they're going to war again, they're going to attack, blah blah blah. You know, we know the story. It's always like this. On the weekend, it's kind of like either we have a pause or we have a complete I'm going to blow everything up and all your people going to die type news. So it's been the story for the past 2 months. We're kind of used to it now. Just like the tariffs, we're kind of used to it. Is the market going to react or not? Is the real question. So at this point, that's why I'm sitting on my hands because it's uncertain. It's in the market hates uncertainty, and usually when it is uncertain, it falls, it sells because it's easier to sell, take profit, and then you get a better price to buy when the market is certain that it's going a certain way. We did bounce off a support. Now this here is now support. That is a confirmed higher low, possibly leading to a higher high. So I would probably see oil around 89 to 102 in the coming week. That's something I'm watching. Gold had a beautiful bounce, but it decided to not continue it, which is sad because it was on a good path. Had some bullishness here, but at the same time, this seems to be a confirmed bearish trend, and I still think it has some more downside. I wouldn't say it's going to leave this area here, but it's definitely going to retest these equal lows somewhere over here. 4,000. 4,000 is the support, so ultimately at this point, we're just waiting for uh, the channel to kind of finish forming, honestly. It's more of a waiting game also on gold, so we'll see what happens. Beside that, this is another thing I am also worrying about is the 20-year yield that is at a near all-time high. That alone is very worrisome because, I mean, granted, it did fall shortly after, in 2023, but those were different times. So ultimately, I think there's a possibility that we are going to hit the highs. If we are 5.4, 5.5, we'll be in major, major trouble. And then it'll fall into 4.8, back to somewhat normal. But as far as I'm concerned right now, that's my main go-to watch to be concerned out of what is happening in the market. Other than that, I don't have anything. I am not looking at any other stocks. I am just hanging out. I'd rather wait than looking at all my stocks fall. I don't really care if anything happens. I'm not looking at anything much more because I don't trust this market. I'd rather wait. If I wait, then I get a better bird's eye view and I save my money. So it's easier for me to deal with that than risking more than I should during a very uncertain market. So just be safe, guys. Just be safe. There's signs. Follow the signs. Just wait for a proper direction. You can already short if you want to. I mean, tech is weak. We have that confirmation that tech is weak. It needs to break this resistance to confirm that there are more upside coming, and then SP 500 needs to break above this last one over here, which is 75.65. Until then, we we can safely probe into short or more short rather, but at some point something's going to have to happen. We're going to break out somewhere. So either we break out this month or we consolidate this month again, compound interest, and then break out in August, September, and then we kind of price ourselves in before the Fed rate hikes because there's 72% chance right now to rate hike in September. So the market has to price itself before the rate hike so that the algorithm just don't, move by thousands of points. So that's the plan. Be safe, and I will catch you on the next one. I'll try to do a midweek one this week just to get an idea as to what happened over the weekend and kind of update on the conditions. But yeah, just be safe, guys.